All right, hello everyone. Tim Davis here, coming to you guys with a market update or market review. Um, quiet time. Today is Saturday, September 17th, 2023. Early Saturday morning, I wanted to do this, get this out the way while I had some time on my hands. So I want to start off by taking a look at the SPXA 200R, which is the tool that tracks the percentage of S&P 500 companies that are trading above their 200-day moving average. And for those who've been following me for a while, you would know that with this tool, always I pay close attention whenever it's hovering around 50, the 50% level. That 50% level normally represents some type of change, overall momentum shift in this overall sentiment of the market. And as you can see, we've been pretty much hovering very close to that 50% range. The percentage tried to go up above this 20 per moving average, but quickly reversed and failed on Friday, as you can see represented here with that red candle, pushing the percentage back below 50%. So that means there's more stocks below the 200-day moving average than above the 200-day moving average, which is a negative for a bullish sentiment in the market and overall positive for the bears. So keep that in mind, that the overall sentiment is still negative in the market. And we are right at a precipice where, the market's going to, the sentiment is going to make a decision. Either it's going to catapult higher or it's going to catapult much lower and start to break down below some major key levels of support. Okay, so keep that in mind. We're still at an area where we can see the overall sentiment go either way, but like the bears really want to push it lower. All right, so that is the sentiment tool. All right, now let's switch and take a look at the VIX real quick. All right, take a look. That's the VIX. All right, worth paying attention to. The VIX, folks. A lot of folks think it's irrelevant. I still think it is relevant. Now, one thing I'll point out, it's a long-term trend line I have drawn down here on the VIX, which is this white line. And this white dashed line represents an area around $13 for the VIX. So the VIX traded down to $13. That is an extreme low that the VIX has been finding ways to bounce from that level all year long. So since June, we've been finding ways. Every time we get down to this level, we find a way to bounce. If I was to pull up a weekly chart, you will see that we've been pretty much been tagging this level for several months now. As you can see, back since June, we've been touching this $13 level, and the VIX has been resilient and not going far below that. Lowest we probably got like 1268, but it's been hanging around the $13 level, and it doesn't seem like it want to break down to 10. We've been hanging here. So with that said, what could we possibly expect coming soon? If you don't see the VIX drop well below 12, then we're probably gonna end up seeing a bounce out of this VIX, folks. And if we switch back to a daily chart, we'll see what the oscillators look like and the Williams percentage, the full stochastics, and the CCI. And this is how we ended on last week on Friday. We finished in the green, big strong green candle on Friday, with the momentum indicator starting to shift in a positive direction for the VIX. If you look at the full stochastics, like it's trying to start to point up. The oscillators Williams percentage is starting to point up out of oversold territory. CCI is just hovering around that oversold territory, but like it's possibly ready to turn up. And every time we've got close to this 13, anytime we got below it, we've seen a strong bounce, as we did here back in July. Seen a strong bounce, then eventually a higher bounce, as we did here back around the beginning of July. Got down to the 13 and then bounced. as we did here around June 26th, got around towards that $13 level on the VIX and bounced. So we are in, so that's the same thing that happened on us last week. Got around that level, and again, we bounced. So the VIX has been famous for bouncing at this level. Now we're bouncing with a big green candle. So unless the bears find a way to push this VIX back towards this $13 level, by the end of next week or sometime middle of next week, we could see a huge bounce. And what I'm be paying attention to as we go to next week is how the 20-period moving average and the 50-period moving average act as it relates to this beginning. Well, it looks like it's trying to be a cross, like it was trying to see if the 20-period moving average will actually cross below the 50-period, which is this purple line, sometime next week. That could keep the VIX muted. However, if the VIX finds a way to really continue to bounce and bounce back above this 50-period moving average and the 20-period moving average, then we can see these two start to curl up as well. So that's how we're paying attention to next week to see how the VIX moves in this market as we start next week's trading. Now, we'll do something a little different this week. Instead of looking at the actual indexes itself, looking at the indices themselves, I'm gonna look at the ETF. So we'll take a look at the SPY, which is the ETF for the SPY first. And I'll try to give some type of targets of what I'm looking for, or what I expect that what possibly we could see going into next week. So I'll point this out right off the bat is that the SPY has struggled to get above this level of resistance, and I think I pointed out last week. I said that is a level of resistance. Look for the SPY to either break above that level, or if it cannot break above it, look for it to get rejected. And it's like we got rejected on last week at that level. So we're in favor of the bears right now. And Friday left us a nice red candle back below the 20-period moving average and the 50-day moving average. Not positive for the bulls, and we got a lot of high volume on the way down. Normally that signals, a continuation we could see in the near future. So with that said, if price action doesn't find a way to reverse itself and go back up towards that level of resistance, the next level of support, you can see price action jump by the VIX. I'm sorry, not the VIX. We can see that this ETF come all the way back down into this trend line, which is where we found some bounces at before. And that will put price action right around 435 or 433. Let's say 433, around about 433. So we could see the SPY go all the way down to 433 if this continuation to the downside continues next week. And that would be an area that we would look to see what price action wants to do next. Again, the next level of support for the SPY seems to be 433 as we started a downward momentum, a downward shift on Friday. That's the SPY. And if you look at a weekly chart again on the SPY, and this is even more telling. Looks like this weekly chart on the SPY has been showing a lot of weakness. So in general, if you look at the full stochastics, this downward shift started, well, the momentum or the oscillator started giving us fair warning back before August, right around here. So that's probably just before August. You started to see a shift in the oscillators. It's trending downward. So while price action is doing its thing on up and down, the full stochastics oscillators have been steady on a steady downturn. Same thing, wins percentage. Overall, it's been in a downward direction, and CCI overall has been heading downward as well. So it's like the bears are trying to sink their teeth, folks, into this market and keep it from the SPY or the overall market from breaking out above levels of resistance, like we headed back to levels of support. So that's something to keep in mind and keep an eye out for the next couple of weeks. And even on the weekly chart, look at that increase in volume as we go down. So that is positive for the bears, negative for the bulls. So again, it's like we're heading to some lower targets on the SPY. Now let's take a look at the DIA, which represents ETF for the Dow Jones. Same here. We take a quick look at the So if we look at price action, we see we're hovering right above this 50-day moving average, right above a level of support here. So if we break that level, which it looks like we could possibly see soon by looking at the oscillators and the full stochastic, it is in a downtrend. Downturn, so we have percentage also in a downturn. CCI has been trending downward as well. So what I'm looking for next week is to see if the diamonds, the tool, the ETF for the Dow Jones, if it drops below this level of support, that will be detrimental, and then we'll have to start looking for new levels of support, and I'll point those out next week depending on what happens this week. All right, let's go straight to the triple Qs, and I'm going to end there this week. All right, triple Qs. This looks like a breakdown is imminent. By looking at this weekly chart, it looks like a continuation of the breakdown is imminent. So if we look at, again, look at the oscillators and the full stochastics, they're trending downward. Wins percentage and downward slope. CCI and the downward slope. Price action been hovering around this level of resistance, but looks like it wants to fail and start to head lower. That's what our weekly chart looks like on the triple Qs. Let's take a look at a daily chart on the triple Qs. Here's the daily chart of triple Qs, and what you'll see right off the bat. Big red candle on Friday with increased volume on Friday. So as we're dropping, we get increase in volume, though that's a negative, and that could signal more downside movement ahead. Look at the oscillators in the full stochastic, just starting to tip out of overbought territory. Oscillators in the wins percentage is straight down. That's bearish, complete bearish. And CCI starting to turn now, also bearish. So, folks, I think things are about to get interesting. So pay close attention. It doesn't look like I'm ready to break out above these levels of resistance. It looks more likely that we're looking to break below major moving averages and start to head lower. Look how close this 50-day and the 20-period moving average is. And you got the 50-day, which is this purple line, already above this 20-day moving average. That is a bearish signal. That's on a daily. And if I was to switch back to the SPX, S&P 500, I'm sorry, SPY, S&P 500 ETF. Let's take a look at that one instead. And we have the 50-period moving average above the 20-period moving average, and we had a crossover back here in beginning of September. Negative crossover, signaling possible downward pressure on the way. And it looks like this red candle is possibly going to confirm that. So if we get follow through on Monday, that's the key. Look for follow through on Monday. In order for a trend to really be established, it needs to see follow through. So if we get continuation to the downside on Monday, then all bets are off. We're probably going to start to head towards some of these levels of support and seeing if we would, if price action can hold them. All right. So looking for follow through on Monday. If we get that follow through, buckle your seatbelts. We're probably going to continue to see downward pressure if we get that follow through on Monday. All right, folks. Until next video, I'm signing off. Enjoy the rest of your weekend.